Joining me now, Mark Gibbens, CIO of Gibbens Capital Management. Mark, thanks so much for being here.
Yeah, glad to be here.
So, Mark, stocks are absolutely sinking today following news that President Trump is going to increase those 10% tariffs to 15%. What's your view on the market given these new tariff plans? Has anything changed in your mind?
Not really. When you look at the intermediate and long term, there may be some, little bit of speed bumps here with tariffs, or maybe some geopolitical tension, say Iran. But the overall economy still looks really good, right? So we're talking about 3% growth. When we look at the markets themselves from a broad perspective, we're looking at, low to mid teens on earnings growth. Particularly in the fourth quarter, earnings are coming in around 13% growth, expecting around 8 or so coming into the quarter. So certainly outperforming there. When you look at the fundamentals and the bottom line numbers, they look pretty good.
So, would you say that down days like today then present good buying opportunities?
I would say that. I'm not saying that markets couldn't fall further than levels that they are today, but when you take a little bit of a longer term view, I think these are great moments for long-term investors.
Well, let's talk about what you would be a buyer of here, given that we could continue to hear additional noise and see additional downside for stocks, because we've been seeing this really great rotation away from tech. Do you look at that as just a pause before the next leg higher for tech, or do you look at that as something fundamentally that's shifting?
Well, I guess I would say kind of both, in that the broadening trade is probably here to stay. At least, again, at least looking at the intermediate term. But tech looks a little bit oversold to me. There are a lot of positive catalysts there. Obviously, the AI capex cycle, but a lot of those, Mag 7 type companies have been hit in recent weeks. Obviously, of course, along with software, but that's starting to look a little bit overdone to me. Again, trying to pick a perfect time to purchase these, great enterprises for the long term can be difficult. But yeah, again, when you're looking at the long-term frame of things, this looks like a good time to jump in on a lot of those names.
Okay, so I did notice that I was looking at your top holdings: Nvidia, Microsoft, Alphabet, Amazon, Palantir, all on there. So you're still pretty tech heavy despite this great rotation that we're seeing. What are you comfortable scooping up here, given some of the downside that we've seen?
I would say, if you're looking at things that are more tied to the kind of maybe the barbell, the other side of that trade, which is more cyclicals, I like small caps. We picked up a little bit of small caps in some accounts. Also like banks. So again, they're tied to the overall economy. We're expecting positive economic growth. The interest rate spread looks pretty good for them. We're coming into possibly a turn up in capital markets activity, and their trading operations look pretty good, especially for the bigger ones. So I like banks on the other side of that trade. I like small caps. But again, we are sticking with a good chunk of our client accounts are still exposed to somewhat to the tech trade. And we like the outlook for it for the longer term. We do know that the market has been broadening. We expect it to continue to broaden, but we think tech is going to start to stabilize here.
Okay, so Nvidia is one of your top holdings. That's really the main market event on the agenda this week, Nvidia earnings. Do you think that's when the narrative starts to shift back in favor of tech? A lot riding on it.
There is certainly a lot riding on it. The king of AI, reports after the bell on Wednesday, and I think the numbers are going to be good. Again, they continue to show stellar growth, and they continue to be reflective of the overall AI capex cycle. So again, it's going to be a bellwether, and I think they're going to show up, and I think they're going to do very well.
What company do you think is best positioned to win the AI race?
I would probably say, not only Nvidia itself, but probably Google. Again, their models have just shown to be very good. So Gemini is looking very good. They also have the cloud and infrastructure piece there as a hyperscaler. So kind of both sides of the AI trade itself. So, it wasn't so long ago, maybe a year ago, that everybody was writing the company off, really, when they saw some of OpenAI's and ChatGPT's capabilities. But I think Google's right there, and it's going to be here for the long term on the AI trade.
Okay, in terms of other top picks, I see JPMorgan is one. You mentioned that you like financials. Is that a valuation play here at this point, given the fact that JPMorgan's down, 7% year to date? Is it a bet on the consumer being strong? What's that about?
It's certainly a bet on the overall economy. So we're going to be getting some fiscal stimulus here. We may still get some monetary stimulus this year. The economy itself looks pretty good. It's powered by that strong consumer and the AI spend. So again, banks are looking pretty good. JP Morgan trades at a little bit of a premium to some of the other banks, but rightfully so. It's the largest bank in the world, and it does very well in executing its operations. So like JP Morgan, regional banks themselves also don't look bad. We hold PNC as well, but the banking story in particular is tied to the economy, tied to as far as companies going public, so the capital markets, trading revenue, and then net interest margin. They all look good.
Okay. And the other top pick that you have here is Shopify, another one that's been pretty beaten down so far in 2026, down more than 25%. Why do you like that one?
So it has been hammered pretty hard here. It's probably a little bit part of that software sell-off. People just thinking that AI is going to eat absolutely everything. But there are certain capabilities that Shopify has. So not only do they operate those storefronts for companies, but they also provide services around financing. They also provide services around logistics. So we think it's well positioned. We think it's kind of the number two in the e-commerce space behind Amazon. We think it has a long way to go. It's starting to work with larger enterprises as well, and it's extending its AI capabilities working with Google's Gemini and OpenAI's ChatGPT.
Okay, I should also note, I see in your top holdings here, GLD, obviously linked to gold, and then IBIT linked to Bitcoin, having very different performances so far in 2026. I should note gold is trading around $5,200 an ounce right now. Bitcoin continues to tumble, trading just above 65,000 right now. Why gold? Why Bitcoin?
Like them both for the long term. We have trimmed a little bit of GLD in recent weeks, just with the kind of run up in price. But we still think the long term, looks good there. So again, both of these are a little bit of their diversification plays, but they're also debasement trades. So, and they kind of play it from just different sides of the fence, but they both are debasement related. And so I think when and if the Clarity Act gets passed here, in the next 12 weeks or so, that's a pretty good boon for Bitcoin, and gold itself also looks good. So again, both of them look really good. Obviously, Bitcoin's taken a little bit of the opposite direction in performance, but again, we think that clears up here in the intermediate term.
Okay, so your best advice to investors, given that you sound pretty bullish despite the fact that it's a pretty downbeat day today and there still is quite a bit of uncertainty now presented from tariffs, best advice to investors on how to navigate this volatility?
I would say stick with what you know. Keep track of the headlines, but don't be out there trading on every single little development. It was just last April when Liberation Day occurred, and the markets got hit really hard. But when we looked, over the next 6-9 months, we realized that our U.S. corporations are very adaptable, and they were able to basically hang on and even build on their profit margins. So Yes, while we did get some news this weekend that the administration is raising tariffs to 50% globally. Again, our operators have done very well just in the past year in a similar type of environment.
Okay. And just finally, before we get to our rapid fire round, anything that you're confidently avoiding at this point?
So I haven't been one to jump on the energy and materials trade, which has done very well year to date. It seems to me that when you're looking out longer term, it's hard to see, as good of fundamental cases um, for those sectors as there are for others, like financials, like technology, like consumer discretionary. So um, I haven't been one to jump on the latest fad with sectors like energy and materials.
Okay, the top two performing sectors so far this year, although we know lots of time left in the year. Before we let you go, we want to do a quick rapid fire this or that round just to sum up your views. Are you ready to play with us?
Sure.
All right, here we go. Tariffs, noise or headwind?
Uh, More noise than headwind. Short-term headwind, but it's going to be noise, I think, within the next month or so. So it's not like there won't be tariff headlines, but it's not going to stop the market.
Okay. Tech leadership or market broadening?
Market broadening continues. Tech stabilizes and begins to move up.
Market cap or equal weight S&P?
I think it's market cap's going to start catching up with equal weight.
AI hardware or AI software?
Play it safe. Play it with hardware. So software, it's a little bit dicey right now. Doesn't mean you can't hold any software. We hold a little bit of software, but I would say hardware is the easier route to take here.
Pitting two top picks against each other, JPMorgan dividends or Nvidia growth?
Nvidia growth.
Large cap tech or we're keeping these quick. Large cap tech or financial value?
Large cap tech.
Domestic growth or international value?
Domestic growth.
AI bubble or AI supercycle?
AI supercycle.
Nvidia before earnings, buy or wait?
Rarely say this, but buy.
Microsoft or Alphabet?
Alphabet.
Amazon or Alphabet?
Alphabet.
Okay, so if you had to drop one, Microsoft, Alphabet, or Amazon, who's getting cut?
I guess I would say Microsoft in the short term. Again, it's a little bit more tied to software, so that's why.
Better hedge, GLD or IBIT?
Right now, GLD.
If you could only own one AI stock for the next decade, who's the winner?
Google. Alphabet.
And finally, one sentence about how you're feeling about where the market's heading this year.
I'm positive. I've got an 8,000 target on the S&P 500, so I'm bullish. That doesn't mean that we aren't going to have any headwinds. Doesn't mean we're not going to have any near-term headwinds, but structure of the market looks good. Structure of the economy looks good.
All right, S&P 8,000, we'll take it. Thanks so much, Mark. Really appreciate you joining us.
Thanks for having me.
All right, that's Mark Gibbens, CIO of Gibbens Capital Management.